Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
We're going to do a real estate market update for Las Vegas real estate market. We don't have data for the other markets. We do have some national data. We have other videos. You can go find that. But this is for Las Vegas. It's for April of 2022. Today's date is April 2nd, Sunday, April 2nd, I think. So we're going to start off with the market action index now. This is a key number that shows how hot the market is. And what's fun is later on in the deck, we have a slide where we actually can see the change in the market action index over the last 3 years. And it's pretty cool to watch. So we're gonna jump right into slide number 1, market action index, and the index today is 78, which is a strong seller's market.
It's a very strong seller's market. To put it in perspective, last month it was like 71 or 72, and we really started making a big deal out of this when it was in the 60s. So 78 is probably the strongest seller's market I can ever remember.
Yeah, a normal market should be like, if you're looking at this, 30 to 40. That's like your normal, healthy, stuff's on the market for 2 or 3 months, it finally sells. Stuff just doesn't disappear off the market. If you were to go back to maybe, if this chart existed, don't know if it did or not, but if this existed back in like 2007 and 8, it would probably, that needle would be way over on the left. It'd probably be like a 5 or a 10 because it was a buyer's market. The home prices were falling, stuff was sitting on the market a long time, and buyers had all the power. Buyers could go in and just buy stuff, and stuff flew off the market. Okay, now we're going to go into median list price. Median list price is sort of interesting here. Now, just keep in mind that bottom number is 300,000. It's not zero. So when you see this, it looks like home prices have really tripled, but they haven't. But the median list price there shows it at roughly like 575, which is for a median price is pretty high.
It is very
it's the highest it's ever been in nominal dollars, like in the dollar amount.
Right. So please keep in mind this is for Las Vegas, not for some place that has much higher incomes like California or New York. So our incomes are not really capable of keeping up with this sort of price increase.
One thing that's interesting was the last time median incomes were measured was at the last census. So it was 2 years ago, 2020. It was really before the pandemic and a bunch of people moved here. It was 58,000 was a household income here. 58,000. So what's interesting about that is that since then, a lot of high-income people have moved here, but they still have a job in California. So what you're seeing in Las Vegas is you have these people who moved here with higher incomes. They look at our prices and they're able to absorb homes. And that's sort of this, I call it the California effect, right? I just made that up. But so it pushes up because you have this artificial thing now. If they stay, it's not artificial. It's just it's the new part of the market.
Well, yes and no. So here's kind of what Todd's really talking about. We're talking about people who came from California, are living here, but are still working in California because they're working remotely. So they're still earning California wages, which is a kind of a different thing than we've ever experienced before, because this whole remote working thing long-term is a very new phenomenon.
Yep. And the reason they're doing this is because it's expensive to live there. Most of these people were renting there, and then they have purchased a house here. So there's a huge difference, and they're saving money. Even though most of them still have to pay California taxes because they have that's where their employer is, they get this huge benefit. Anyway, next slide, median days on market. Now this shows the trend over the last 3 years, and as you can see, it's generally a downward trend, but if you look, we're really at the lowest. And the last time we were this low was this time last year, April of 2021. There's 2 lines on this chart. The solid line is the 90-day average. That averages out the last 90 days. That's why it's a little bit of a smoother line. The 7-day is a close-in one, the last 7 days. But the 7-day median time on the market is like 17 days.
Right.
It's really short.
So part of the reason is because when we list the property, we have 2 choices. We can put it on the market for everyone to see and make offers on it, or we can put it on the market in the status called coming soon. Now, coming soon means that there is no access to the property. There might be pictures, there might not be pictures, and whether or not they will entertain offers during the coming soon phase of the marketing, it depends on the property. So that all feeds into this, because there are lots of properties that are in coming soon status. Again, no pictures, no access, where people are making offers on these properties. The offers are being accepted, so the property goes from coming soon to already under contract instantly, rather than transitioning through being on the market for several days. And that's when those days on the market actually start. The days on the market do not start until a property is officially on the market. So if it goes from coming soon to already an accepted offer, that's effectively a 1 day on the market or a 0 day on the market, and that also skews these numbers.
Okay, this is a really important slide. Inventory. Now, so I'll go ahead and put the slide up. Inventory. Now remember, that bottom line is 1,000 homes on the market. It is very likely at some point this chart will have to get adjusted if we go below 1,000. Now when you look over there all the way to the left and you see 2019, you see between 5,000 and 6,000 houses on the market. That's kind of normal for here in Las Vegas. It's a little over 1% of all the homes that are in Las Vegas. But you can see that the inventory level is crazy low. It's actually about 1,200 or 1,300 homes. Remember, we have 400,000 residences here in Southern Nevada. So having this low of an inventory is really something. It's really incredible. It's what's driving up home prices. Literally, this is the thing driving it up.
Absolutely. So this kind of reflects the home inventory prices primarily in the resale market, a little bit in the new home market, but primarily in the resale market. What's happening in the new home market is really a mirror image of this, as far as it's the same exact thing where builders simply do not have inventory. They are taking offers on new homes. So they'll say, for example, this home, we are starting at $500,000 and we are collecting offers over the next 10 days or whatever period of time, and then the highest offer will get this new home. So it's not like it used to be where you walk into a new home builder and the price was the price. It's not like that, because they have figured out that they can actually get even more money for the house. They can drive up interest because of the demand and go ahead and sell the house for more money than they envisioned.
For those that are watching the video that are also watching the videos where they talk about the housing bubble, there's no bubble. There can't be a bubble until there's a ton of homes on the market. The last time the market collapsed, there were 26,000 total single-family homes, condos, townhomes for sale in the MLS. Here in Las Vegas, 60 to 70,000 just in Phoenix. There's no way home prices they don't just drop. It's not like the stock market. The stock market could change on a dime because people can wake up tomorrow and say, I need to sell these stocks. And then the prices can go down overnight. But that can't happen in the market. What happens in the housing market is people have to list their homes, and a lot of them have to do it. And right now, those homes are all being absorbed. So until we see this inventory level go up to like well above 10,000, like it literally we have to have 8 times as many houses on the market before prices start to decline. And right now, there's no indication that's going to happen. We're going to do a whole nother video on foreclosures, but that could be something that would drive this, but there's no foreclosures. We have a video on that that we just did last month. So this is probably the most important thing when you watch those other videos where they say, there's a bubble coming, there's a bubble. All they're looking at is the price. They don't get it. They think, well, the price goes up, it's got to go back down because of whatever. But where? Like, the people that are, no one's going to start dropping their prices to sell it, because as soon as they put it on the market, they get offers, right? It's how the market works, supply and demand. Market segments, we really like this slide. This breaks the market into 4 segments: the top quarter of homes, the second quarter, third quarter, and the bottom quarter. What's impressive is the bottom quarter. If you took at the bottom 25% of all homes and went to the 12.5% point, so the middle of that, the median in that is 380. And that was the median of the market about 15 years ago. 16 years ago. That was the median home was about that. So home prices have increased substantially. What's also incredible is that 1.5 million number on top. So that's 1 in 8 homes. 1 in 8 homes in Las Vegas are selling for over $1.5 million. Now, that's like unheard of because we have a luxury market. We never had a luxury market in the past. I grew up here as a kid, and there was no such thing as luxury homes. Even the super famous rich people just had really nice homes, but they weren't like, 6,000 square foot, houses overlooking the city with a pool and, all that. They were just, nice 3,000-4,000 square foot houses and maybe a little closer to downtown. But now we have this new thing, luxury homes. We
do. And the luxury home market is extremely healthy in Las Vegas. I can't even begin to tell you how healthy it is. We have buyers from all over the world. There is a lot of money in the world, people. And it's coming to Las Vegas, it's coming to Miami, it's coming to New York, it's coming to all kinds of places. But Las Vegas is participating much more than it has in the past in the luxury market. And we have a lot of homes to meet that demand.
Another thing that's kind of interesting is that the new home builders are building more $1 million homes. There's a number of new home builders. When you walk in, the base price on all these homes is $1 million. Mm-hmm. And we didn't ever had that before. You're actually, Las Vegas is a market traditionally where it's tract houses.
Well, and these are tract houses for $1 million. I think we need to point that out. These are tract houses that start at $1 million.
They are luxury homes, though. They're luxury homes. We have, matter of fact, I'm going to put a link right here to a walkthrough we did of one of these $1 million homes. Base price was about $1 million. Base price. Of course, the house you're seeing in the video is more. This is a walkthrough we did with Oana, where we walked through it and looked at it. So take a look at that. The next slide here is price per square foot. 90-day average is $255. 7-day average is $264. That means that because the 7-day is a higher number, that's the trend. It's still trending higher. So we're not going to see this level off or go down. This number is going to keep increasing. Mm-hmm. Keep in mind that a year ago, when it was at probably 220, there were people selling their houses saying, the market's overbought, I'm just getting out of the market because I'm going to wait for it to crash and go buy a house again. And now it's 260. And
right.
Homes are more expensive.
They are more expensive. And we do know a number of people that did that last year that thought the market was going to go down. They sold their homes, they rented, so they've now been renting for a year or longer. And they have obviously wasted the money on rent, and the home that they sold is worth considerably more.
This is why we say you do not try to time the real estate market, because that was, people that are going, okay, now I'm going to sell today. And then the house sells really quick. And then they look back 3-6 months later and go, wow, prices are gone up. If I'd have sold today, I'd have got $20,000-$30,000 more dollars in my pocket. Now I don't have that money. Oh, and I've paid 6 months of rent somewhere that it's gone. I'm not paying off a loan or anything like that. And I think there are going to be some people who potentially possibly have seller's remorse, mm-hmm. right? You've heard about buyer's remorse. We have seller's remorse because they tried to time the market. So anything more on that, Oana? Just because that's we say this all the time, don't try to time the market. Look, if you think real estate, if you're buying an investment property or you think you're going to move here permanently, just buy a house. Mm-hmm. If you're not going to be here permanently, don't buy a house, right? Unless you want to buy it and you're going to move and you're going to make it a rental.
Right. So the thing to keep in mind, I think what's different about this go around than maybe other go arounds is that the full segment of the market is participating in this appreciation. Because in the past, when we've had this sort of rapid increase in prices, the luxury market did not participate as much. And they are participating just as much as everybody else. And I think that's really interesting because we do have a number of buyers who purchased last year luxury homes, 7 figures, and they have participated in this appreciation too. And I think that's really interesting. And I think that maybe makes this market more sustainable.
The last slide is the fun one. It's the Market Action Index. Now, if you look all the way over to the left, you'll see the Market Action Index for 2019 and basically into the beginning of 2020 was just 38-ish. It was over there, a normal market. And then you can see it started to take off in 2020, and then COVID hit, and there were lockdowns, and then it declined. But by July of 2000, it started taking off a little. And it took off a bit, and then it kind of leveled off, and then it just took off again. So 2021, 2022, you can see the Market Action Index. It's still a little bit lower than it was in 2021, but we still have an extremely strong market. And what's impressive is where this thing is potentially going to go in May and June. Mm-hmm. You saw that was 78. At one point, the 7-day, if you look at that dashed line, which is the 7-day average, it was up in the upper 90s. It was at like 96 because there was just probably a couple days where inventory declined substantially, maybe. Mm-hmm. Not many homes came on the market, but maybe 100 or 200 disappeared. Mm-hmm. And that index said, it's taken off. which you see the same thing happen in 2019. So when we see this start to decline, that downward trend, then we start to get worried. But we don't get worried really until this goes below 40, because if this goes back to 40, home prices then just basically stay the same and they don't keep going up, which is actually fine. That's totally fine.
Right. So remember, the thing that we're focusing on is inventory right now. We know that interest rates are going up. We understand that. We understand, the whole mechanics of everything that's going on. However, when you don't have inventory and you have people who need to live somewhere, they're going to purchase, and you're going to have this sort of buyer frenzy because there just are not enough homes to go around.
Yep. And another reason you have buyer frenzy, and we've talked about this before, is because of inflation. There is inflation right now. This is probably the second most inflation we've ever had. And the last time we had inflation like this, everything cost more, including homes. Home prices went up because of inflation. We have a whole other video we're doing about how interest rates affect home prices. And you're going to be surprised when you watch that video. So make sure you subscribe, hit the notification bell, share the video, so that when we do that other video where we talk about interest rates, that you'll be blown away and be like, oh my gosh, I had no idea of the relationship. And you'll realize that probably a lot of the things you've heard about the oncoming housing crash, what they've been talking about for a full 2 years, if not more than 2 years, full 2 years about the market's going to crash. It hasn't happened, and why it hasn't happened, and why it's not likely to happen at least this year.
Right. So if you like the video, please subscribe, hit the notification bell, share the video with your friends. And lastly, I want to know what you think. What do you think is going to happen with the inventory, at least here in Las Vegas or wherever you are? Because I think this whole inventory shortage is nationwide. So what's happening with the inventory where you are? What do you think is going to happen with the inventory where you are? We want to hear from you, so please leave us comments and let us know.
All right. See you on the next video. Bye.
Bye.